Nate, this is Jerry. I'm gonna have to leave at 2:45 if we're not done, but I don't think that'll be a problem because this is just a report. You're not taking any action on it.
Yeah, I mean, unless as soon as you leave, we just start voting on stuff willy-nilly, then hope no
Yeah,
one
you
tells.
shouldn't be voting on anything. That's the point. No votes, just a report.
I like raising my hand and saying aye, Jerry. I can't
Yeah.
help.
Good afternoon, everybody.
Good afternoon.
Good afternoon.
Good afternoon, everyone.
Good afternoon.
Hello, Dr. Rogers.
Good afternoon.
All right, I'm just pulling up the agenda. All right. All right, well, let's open up with a roll call.
Okay, roll call, Chair Rogers,
Present.
Trustee Kelly Benavides,
Here.
Trustee Waugh,
Here.
Trustee Foyt, Trustee Whiteley,
Here. Sorry.
that's okay. And for the record, we have Trustee Ortiz.
Here.
And that's it.
All right, so it appears we do have a quorum, correct?
Yes.
All right. Okay, let's go. Do we have anyone sign up for public comment, Tina?
No, we don't have any public comments.
Okay, we'll go to agenda item number 3, which is acceptance of the proposed agenda. Do we have a motion?
So moved.
So moved.
Second.
All right. All those in favor of accepting the agenda as presented, say aye.
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 Any opposed? All right, motion carries. Agenda is accepted. And let's go to new business. And our first item is a discussion regarding the fiscal year ending June 30th, 2025, tentative budget submittal to the State of Nevada Department of Taxation in preparation for the May 23rd, 2024 budget public hearing. No action is required, so this is for information only, but we will turn it over to Floresto to walk us through that update.
All right. Thank you, Dr. Rogers. And thanks everyone for attending. This tentative budget is due to the State of Nevada Department of Taxation by April 15th. And I'll go through a summary of the actual document that we will be submitting to the state. And I'll start off with the revenues for all funds. Starting with the general fund, revenues are increasing by $7 million. That's primarily an increase in property taxes. Special revenue funds, the gift fund and the grant fund, always net to zero every year. We budget the amounts at a high enough level, so depending on the amount of grants or gifts we receive during the fiscal year, we're actually able to spend those funds. So that's traditionally kept fairly high. We do know we're receiving approximately $1 to $1.5 million in literacy grants, and we must spend that amount before the end of the fiscal year. So again, we received the $1.5 million in revenues, so we spend the $1.5 million, and That's what's meant by netting to zero. And we're always seeking out new gifts and grants. So again, that's the reason for the $10 million budget in gift funds and the $20 million in grant funds. On the possibility that we receive a large grant or gift, we want to be able to spend it, and that explains the large amount there. The capital projects fund revenues, that amount you can see increased significantly for the current fiscal year budget from 2025. We actually expect to receive $1.5 million in investment income in 2024, this year. And that's because originally this 2024 budget was based on lower interest rates at the time. And as all of you probably know, interest rates for investments as well have risen substantially over the last fiscal year. And going into fiscal year 2025, we expect that to continue on average. You may have seen the headlines this morning. The inflation report came out and CPI came in hot. So that may encourage the Federal Reserve to keep rates higher for longer is the tagline we're hearing a lot now. So the investment income for the upcoming fiscal year may be relatively high again, but as rates come down, investment interest rates, that amount will lower. The investment income will, of course, lower. And we also have less funds invested in the capital projects fund because of construction for the West Las Vegas Library. The debt service fund exists, so we budget for it each year, but the district has no debt, so there's very little activity in the debt service fund. We get a small amount of property taxes each year. These are delinquent taxes. The district retired its debt years ago, but there is a small amount of ad valorem property taxes that taxpayers owe that trickle in from year to year. So that's the reason we budget a small amount in debt service.
And Floresto, could you just restate the 1.5 million in actual FY24, which revenue line that is aligned with?
Yes, that would be investment income. So if we were to look at our financial statements, that would be interest and capital gains on the district's investments.
Okay. And then regarding, I know you mentioned that we typically budget high on the gift fund and grant fund. Could you also share, if you have the number at your fingertip, what's our FY24 actual?
24 actual is approximately $2 million, just under $2 million. And that's for the grant fund, approximately $2 million. Like I mentioned, a grant we receive every year would be for adult literacy. And so that we can rely on every year, but we do receive other grants throughout the year. And so for fiscal year 23, we're looking at under $2 million, and we would expect around $2 million in fiscal year 25. But again, there's also the trustees, I'm sure, is aware of some federal apportionments that the district is seeking. That could be as high as $10 million, and that's the reason for the $20 million here. It's accounting for the possibility of those large grants.
Okay, thank you for that.
You're welcome.
Any other questions for Floresto regarding total revenues before transition to the next slide?
All right. Moving on to expenditures, starting with the general fund, expenditures are increasing by $8 million. That's primarily due to salaries and benefits. The special revenue funds, we talked about that. These amounts are set at the same amount of revenues. Whatever's received is what we plan to spend. The capital projects fund, there was a decrease in $17 million from 24 to 25, and that's due to the West Las Vegas Library project. Much of the spending on that project is happening this fiscal year 2024. So the district will be spending less on construction on the West Las Vegas Library in 2025. Again, that's a little unusual because the bulk of construction is happening in fiscal year 2025. The reason for this relates to the New Markets Tax Credit Program. So I'll cover the flow of funds and the expenditures towards the end of this presentation. But if there are any questions now about any of the expenditures for the different funds, I can answer them now.
Mr. Chairman, Felipe Ortiz.
Go ahead, Felipe.
Mr. Chairman, through you, I had a question for you. Forresto, I see that salaries increased by $8,224,679. That's quite a bit. Are we getting new people for that, or is that an increase in everybody's salaries?
Trustee Ortiz, I can jump to this slide here. This is the total of the 8.2 million. You can see that the majority of the increase happens here for salaries, $3.1 million there, and
Okay,
benefits.
So let me rephrase the question. Thank you. So for $3,145,153, is that for new employees or is that for pay increases?
It's the pay increases for all employees. Per the collective bargaining agreement, employees have a 4% cost of living adjustment that kicks in on July 1st of the new fiscal year. And employees are also eligible for a 4% merit or performance increase. So together, that's roughly an 8% increase for all employees.
Okay, thank you.
Yep, you're welcome. And while we're here, I can talk about the benefits. That's increasing by 10%. And the benefits are a function of salaries. The biggest component of benefits is the public employee retirement system contribution. And that's based on the salaries to employees. So as employee salaries increase, so does that contribution to PERS. There's also a healthcare premium component that increases every year per the collective bargaining agreement. So that's another reason for the increases in benefits. So you can see that together, this is the largest increase of the expenditures for the general fund. Services and supplies is increasing by 11%. Much of the increase there in the general fund is due to multi-year contracts that increase based on the term of the agreement itself. And so that combined with rising utility costs is the reason for the $2 million increase in services and supplies. Library materials is increasing by $1.3 million. And that amount is always based on the total expenditures in the general fund. That's set to 15%. So depending on all of the other budget amounts from salaries, benefits, and services and supplies, we determine what 15% is of that total expenditure number, and that becomes the budget for library materials in the new fiscal year.
Mr. Chairman, through you, I had a quick question.
Move forward, Trustee Ortiz.
Good afternoon, Felipe Ortiz for the record. Forresto, I wanted to ask you, when do you capture the purchase of new furniture for the West Las Vegas Library? Is the expense captured in this year, or is it going to be captured next year?
It'll likely be captured towards the end of construction. So that will actually be fiscal year 2026. So
Okay, very good. Thank you. So it's not in this report. So very good. Thank you.
Yep, you're welcome.
Thank you, Mr. Chairman.
No problem.
I'll back up. We were talking about the general fund expenditures, but to go over the revenues, we have the largest increase of $7 million coming from property taxes. That is a number we're really satisfied with. That tells us that assessed values of real property throughout Las Vegas and Clark County is continuing to appreciate. And that aligns with our understanding of the economic conditions at this time. Residential real estate has maintained its value, if not appreciated, due to factors we're all aware of, the record low mortgage rates over the course of the pandemic, and homeowners reluctant to sell, which is driving down supply, which increases demand and prices. The commercial property component of property taxes is powered by the Las Vegas Strip. And again, the performance on the Strip from different mega resorts are doing well. There's new construction coming online. So we're not surprised by the large increase in property tax revenues in fiscal year 2025. And again, that amounts to 11%. What may be more surprising is the consolidated sales tax revenue is flat for the fiscal year. We are going to meet the budget expectation in fiscal year 2024, $31 million, and expect $31 million in fiscal year 2025. That's also the projection by the state of Nevada. They're traditionally conservative. And over the last couple of years, staff here has felt that consolidated sales tax, could come in higher than the state's projection. But for fiscal year 2025, we agree with the state that this is keeping the budget flat, makes the most sense, because depending on economic conditions, we talked about inflation reports, the economy can go either way, with consumer spending going down or actually going up. Charges for services revenue and miscellaneous revenue is status quo, so not a whole lot of fluctuation there between those two revenue lines. And again,
Foresto, could
yes.
you maybe give some examples of what would flow through under the miscellaneous revenue?
The miscellaneous revenues is composed of, again, a number of things, but one of the largest components of miscellaneous revenue is a program known as E-rate. These are rebates that are received by organizations for utility costs and compliance with certain expectations of how those utilities are managed. There's a federal, subsidy that's provided to the district, and that could amount to anywhere between $200,000 and $300,000. There could also be contributions. Not all of the contributions, gifts, or donations are recorded in the gift fund or special revenue fund. Some of those are, for accounting reasons, recorded in the general fund. So that amount is also incorporated into miscellaneous revenue.
Okay, thank you.
You're welcome.
Mr. Chairman, one quick comment.
Trustee Ortiz?
Thank you, Mr. Chairman, through you. For my trustees that are here online, the consolidated sales tax, for me, being on this board for 10 years, that really is the bellwether. That tells us how the economy is going to go. What does that mean? There's people buying less cigarettes, less alcohol, dry cleaning. That's the tax on buying your tickets to the movies, so people are spending less money. So we're going to really have to ask the director to report to us to watch the budget, so that this is a projection, right? And it looks good to me. But I'm also watching that the amount of money coming in from other resources is just flat. And so I'm glad to see, Foresto, that you underestimated the revenues, so that we're not caught with overestimating those. Just a comment. Thank you, Mr. Chairman.
Yes, thank you, Trustee Ortiz. Yeah, that's exactly what we're seeing here, and why we're budgeting with this approach. Investment income is coming in higher, where just like with the capital projects fund, we're expecting to receive $1.3 million in investment income in fiscal year 24, which is the current fiscal year, and that amount should taper off in fiscal year 2025 as interest rates fall. And to Trustee Ortiz's point, the rates could change and investment returns could change. Even though this is a nice increase or windfall in investment income that contributes to operations, we can't bank on large amounts of investment returns from year to year. So again, in each budget year, we're conservative, but we are comfortable that this budget amount in investment income will be fairly accurate in fiscal year 2025.
And then Foresto, how optimistic? I mean, I know the investment income increased 300%. So is that expected to come to fruition?
Yes, based on our current investments, which are funds in both the general fund and capital projects fund, are invested in high quality securities. They're backed by the full faith and credit of the United States. So there is virtually zero chance of losing principal there. So the income is based on interest paid through these securities, and those are locked in when we purchase these investment instruments, which are bonds and treasuries. And
okay,
those, investments are laddered over a period of time. They mature at every 3 months, 6 months, 1 year, and again, those returns are guaranteed. But when they mature, we take those funds and reinvest them, and those could be at higher or lower rates.
Okay, thank you.
Based on the current portfolio of investments, we are comfortable that we will receive roughly $1 million in the upcoming fiscal year.
Okay, thank you for that additional detail.
All right. I believe I already covered the expenditures for all funds. We went over the revenues. Are there any other questions there? I'll move on to, we covered the general fund expenditures. So that brings us to, of course, the ending fund balance. This is always a number we watch closely or budget for very deliberately. If the state of Nevada expects one thing, it's a balanced budget, which means this ending fund balance is not negative. And the district's approach is to, again, to be conservative, to have a sufficient fund balance to fund any possible shortfalls in revenues, and to fund any unanticipated expenditures that may arise during a fiscal year. I've discussed before during the pandemic that we've budgeted a much higher, not a much higher amount, about 20% in ending fund balance, meaning that would be 15 or 20% of total expenditures in the general fund. With the improving economy, we were comfortable lowering this amount to 15% in the prior year. And we backcast this amount of ending fund balance. We want to ensure we have a 15% ending fund balance, so the transfers from the general fund to the capital projects fund depends on that 15%. If we needed more funds in order to arrive at a 15% ending fund balance, this transfer amount, the transfer amount is actually $16.5 million this year, would go down. And again, if we need a lower number in ending fund balance, the amount goes up. So that's what determines the transfer from the general fund to the capital projects fund. We want to ensure first the healthy reserve, and then after that, any surplus is transferred to capital projects. So the transfer again is $16.5 million, and I'll outline how that's being allocated in the different capital programs here. Our critical programs, or the programs considered critical, are these two: technology replacements and upgrades, and building repair and maintenance. I've also discussed this in the past. We would like to ensure that at least $3.5 million is available for these two programs to spend in each fiscal year. And so you can see this year a transfer from the general fund of $700,000 and $2.3 million is required to cover the expenses for the upcoming fiscal year 2025, and still leave a $7 million fund balance, which is actually 2 times the $3.5 million we want to make available each year. So for some reason, a transfer was not available in a given year, we would still have enough funds in reserve to make expenditures to cover any tech replacements or building maintenance. So again, this $7 million for tech and building repair is a 2-year reserve. But you can see here the budget for the current fiscal year, about $1.8 million for technology and approximately $4 million for building repair and maintenance. The vehicle replacement program, it has an estimated sufficient fund balance at the end of this fiscal year, 2024. So no transfers are required, and staff has budgeted $150,000 in vehicle replacement expenditures for the year, which again leaves a healthy fund balance at the end of 2025. And the district may not purchase $150,000 worth of vehicles, but depending on the rotation and maintenance of the fleet and the needs, that's again a healthy amount to be able to cover any needs in the fleet of the library district. Library materials, we talked about furniture, fixtures, and equipment for the new West Las Vegas library. Around the same time, staff will be accumulating a collection for the new library. It'll be brand new. All of the print materials will be brand new for the new West Las Vegas library. And we estimate that amount to be $1 million once staff begins purchasing materials for the new library. That amount is already available. We transferred $1 million to the library materials program in fiscal year 2023. So by the end of 2024, that $1 million will be there ready to spend when the new library, when we approach the opening of the new library and start building the collection. The furniture purchase and replacement program operates just like the vehicle purchase and replacement program. It has a sufficient beginning fund balance or ending fund balance at the end of this year. And so it won't require any transfers from the general fund in order to cover the expected expenditures of $305,000 in 2025, and it leaves a sufficient fund balance. at the end of 2025 to roll over and make available for the new fiscal year. The financial services program is a reserve that covers equipment such as, public copiers and staff copiers. That budget of $305,000 here is assuming that all of this equipment goes down at the same time. We could actually replace all of those items if needed, which is unlikely to happen. These equipment need to be replaced, sporadically throughout the year. So we know we're going to have a savings in this $305,000, but the current budget, allows for spending of all the funds available, but it leaves a healthy fund balance also at the end of 2025. The community engagement capital program is meant to maintain and to upgrade venues for the public, things like auditoriums throughout the library district. That began with a balance of $420,000 at the end of this fiscal year, which is the amount available at the beginning of fiscal year 2025. And it required a $1.5 million transfer in order to cover the $1 million in expenditures in 2025 and leave a positive fund balance. The capital construction program will have $22 million available at the end of this fiscal year. The district has actually maintained somewhere around the amounts of $40 to $50 million while we've been accumulating funds to build the West Las Vegas Library. That amount ends up totaling $22 million in this fiscal year, 2024, because much of the expenditures by the district for the West Las Vegas Library project happened this fiscal year. And again, I'll go over that in more detail in a minute because it's related to the New Markets program. But another $12 million is available to transfer to this program. And we expect $1.2 million in investment income. And there's $8.2 million budgeted to spend, again, on the West Las Vegas Library project, which will leave a balance at the end of the fiscal year 2025 of $27 million. Now, to walk through this line item, I wanted to make sure the trustees understood the flow of funds for the West Las Vegas Library project and how the New Markets program is related. This is also an update. Staff completed this transaction in on March 15th, and that provided the net benefit or the amount that's going to be available to support the West Las Vegas project in the amount of $6.5 million here. I mentioned that much of the expenditures for construction happened in fiscal year 2024, and that's because as part of the New Markets program, the district as a sponsor of the West Las Vegas project contributed $23 million to the available resources, basically. It flows through the New Market structure. The amount was actually contributed to the foundation, who makes a loan to other parties in the New Markets program. But at the end of the day, $23 million was contributed by the library district in the current fiscal year. So that's an actual expenditure this fiscal year. The net benefit, again, is the amount that the New Markets program is providing to the project. So this is the amount that the district benefits from that's contributed by the program. And it totals almost $30 million. So between the amount that the district contributed this year and the amount of net benefit that was made available by the program, there's actually $30 million available for spending as of right now. And here I broke down the construction budget by fiscal year. In 2024, we expect to spend $5 million on construction for the West Las Vegas Library project. We just broke ground, and this is just the kickoff of construction. $5 million is the budget, but we've already have $30 million available. So this $5 million really comes from New Markets funds. So there isn't really an out-of-pocket expense to the library district. The library district has made its contribution towards construction, and these funds from in the New Markets pool will cover all construction expenditures going forward until it is exhausted. So you see here in fiscal year 2025, the construction budget expects to spend $30 million on the West Las Vegas Library project. Because again, we broke ground this fiscal year, and the majority construction will be completed in fiscal year 2025. But you can see that there's $24 million available from the New Markets Fund in this fiscal year. So that amount offsets the amount that will be spent on actual construction, which means that the only additional construction costs left to be funded is here at $5.8 million. Going into fiscal year 2026, this is when the library project will be completed. We're expecting an opening around September 2025. So the remaining cost, that would be fiscal year 2026. So the remaining cost would be approximately $2.3 million. And New Markets funds would have been exhausted. So there will be an out-of-pocket expense of $2.3 million coming from the district. And just to go over the totals, the construction budget for the library project is $37.9 million. We have $29 million available between the amounts contributed by the district and the amounts contributed by the New Markets program. So the amount on top of that the district will spend will be a total of $8 million. And that was a lot. I'm not known for being concise, so if there are any questions here, like I can answer them.
Mr. Chairman, I did have a quick question. Felipe Ortiz.
Trustee
Mr.
Ortiz.
Chairman, thank you very much. Through you, Felipe Ortiz. How do you, Floresto, how do you account for the $500,000 contribution that Congress gave us? Do you?
Yeah, that's a great question.
Do you count it now or next fiscal year?
That amount we expect to receive in the new fiscal year, that's not reflected in the schedule here. So that is another $500,000 that would offset the cost here. So along with this $6.5 million from the New Markets program, another $500,000 could be added onto that to reduce the actual out-of-pocket expenses by the district. So this $8 million would actually end up totaling $7.5 million. That's a great question.
So for purposes of the report to the state legislature, it's not included in this report because we don't have it yet.
Yes, that's not currently reflected in the budget.
Thank you. Thank you, Mr. Chairman. That's it.
No problem. And then I did have a follow-up question related to the New Market Tax Credit Program update. I know we had some initial conversation about there being a possibility to also get New Market tax credits in a subsequent fiscal year because the construction project was going to go across multiple years. Is that still a possibility in this scenario?
Yes, that's not reflected in the budget either, but staff is actively seeking more New Markets funds. The amount of the net benefit that comes from the program can be as high as $10 million or close to that amount. We've received $6.5 million from our efforts so far, but there are state New Markets funds that are still available. And in fact, Director John Bino and I gave a tour of the East Las Vegas Library recently to representatives from the federal government who are interested in investing in the new West Las Vegas Library as part of the state New Markets tax credit program. Again, they were excited to see a template, an example of what the library district does with New Markets funds. The East Las Vegas Library was a great example. And so we are working with those individuals to seek state New Markets tax credit funds, which is different from the federal program. So those funds are still available, and there are still other investments that are possible because we didn't completely max out on the amount of potential investment we could get from the New Markets tax program. Our partners from Crescent Growth to QTAC Rock did a great job of recruiting investors, and that gave us the $6.5 million in net benefit. But as you said, Dr. Rogers, in the new fiscal year, these investors will receive another round of what we call allocation that they could invest in other programs or projects. And again, we'll be, seeking, them out to find their interest in investing even more in the West Las Vegas Library project. So I would estimate at this point that there could be as much as another $2 million available in new markets funds that we could obtain in the new fiscal year that would offset the cost of construction even further.
Thank you for that, Floresto. Any other questions for Floresto for his thorough update? All right, Floresto, as always, you answer and anticipate all the questions in your presentation.
All right, thank you.
So as I mentioned, this was for information only as part of a requirement to submit the tentative budget for the May 23rd, 2024 budget public hearing, and no action or vote is required at this time. And if there are no questions, we'll go to agenda item number 5, public comment. Tina, do we have anyone sign up for public comment?
No, there are no public comments.
All right, if there are no further questions or comments, then we will go ahead and move to adjournment. Do we have a motion to adjourn?
So moved.
Second?
Second.
All right, all those in favor say aye.
Aye.
All right, we are adjourned. Thank you, everyone.